What's up, everybody? What's up? I'm actually in my wife's little lash studio that I built for her. But that's why you see the little big old eyes in the background with the lashes and stuff. So, and if you're in the area and you need your lashes done, my wife is the best at what she does. So, feel free to look her up. It's Raising Queens Beauty Bar is the name of her company. Anyhow, no. So today, what I want to go over is top and bottom line. We've went over this before, I just want to go over it again and again and again and again because it's the most talked about thing on the market, right? Um, every quarterly earnings come around um, every 3 months, and that's when you really get to figure out if the company's still doing good, doing bad, starting to stall out, just kind of level. You get to figure out like what's in the pipeline and everything. But the two main things they're going to talk about is top line and bottom line. And a lot of people just they hear it all the time, but they don't really understand the meaning behind them. And top line and bottom line can really just tell you a lot about a company. And it's an easy metric to find. It's probably the most common metric to find on any company. So we're gonna go over that. All right. Uh, so top line is revenue. Okay. Uh, anytime you hear top line, think revenue. All right. So when a company reports earnings, the first number they usually drop is the top line, also known as revenue or sales. Okay. Um, it's this is the total without anything taken out. How much did we make? Okay. It's called the top line because it's literally at the top of the income statement. That's why they call it the top line. Okay. So if you didn't, a little fun fact there, if you didn't know that. This is how much money the company made from selling their products or services before any expenses were taken out. An example is if Apple sells $100 billion worth of iPhones, Macs, and services, the 100 billion is their top line revenue. Top line growth means the company is bringing in more money than before. Sales are going up. That's good. We always want that, right? Bottom line, okay, is net income. What does net income mean? Net income means how much money do I get to keep after all my bills are paid? Okay, so after the company brings in all this dough, and after they pay all their employees, all the bills, everything going out, how much do I have left that I can consider like cold hard cash? You know what I mean? And so this number is going to be more important. Okay, guys, you can have a company that's bringing in a bunch of money, but if they ain't managing their money right, and they have more going out than they have coming in, so like they might be growing exceptionally, and their top line is like, oh man, they're growing 20%, a year or a quarter or whatever, and then you look at their bottom line and it's shit, and it just really what it means is it could mean a few things. It doesn't necessarily mean that the company's doing bad. It might mean that they went heavy on some R&D that quarter or that year. You know what I mean? And so it's going to pay off the next year or whatever, right? So there's always reasons why, right? So it might not necessarily mean they're not managing their money right, but you need to figure that out because that could be the meaning. It could mean that they're not managing their money right. So you just need to figure that out. And if once you figure that out, it might be a good thing that the bottom line, isn't where it needs to be that quarter or that year, because like I said, they're going heavy on like research and new, whatever they got going on in the pipeline, right? And so you won't see the benefits of that until further, future expectations. But and especially if they keep doing it, like if they keep doing it, if they keep failing on the bottom line, then most likely that they're not good with their money, and they're growing fast. They have a good product, but they don't know how to manage the money behind that product. and so you don't want to be invested in that company. You want to be invested in companies that, you know, they're spending their money wisely. So anyhow, an example of bottom line is, let's say Apple had 100 billion in revenue, but 80 billion in costs, so 80 billion in bills. Well, then after that leaves them 20 billion net income. So they got 20 billion to work with, or to put on the sidelines, put in savings, or buy back shares or whatever. So bottom line growth means the company is not just selling more; they are also managing their costs and keeping more profit. See, managing. It's all about managing their money, right? Okay. Why it matters for stocks. When earnings come out, Wall Street watches both. Did the top line beat expectations? Did the bottom line beat expectations? Are they growing year over year? Get my ugly ass face out of the way. A company beats on both, the stock usually pops. They miss on both, it can tank. But sometimes they eat on revenue and miss on earnings, and investors get mixed signals. That's what we just went over. Okay, so if you get mixed signals, you need to dig a little deeper and see what's going on. It might be justified, and it may not be justified. So that part's on you, or us, I should say. Final tip: just remember, top line, total money made. Bottom line, how much money did they keep in their pockets? Okay. Both are important, but in the long run, it's that bottom line, the profit, that drives real shareholder value. Okay? And I love this freaking game, guys. I just, it's like looking at your future, and you just got to reach out and grab it, honestly. Like the answer to all your financial problems are in the market. I promise you it is. Now, money that you need, don't put in the market. All right, if you need it to work out, it never will. Okay, this game is completely psychological, 100%. So if you put money in the market that you need, you're screwed. All right, so don't start putting money in the market unless you can just forget about it, or not have to worry about losing it or whatever, at least in the beginning. Okay. How fast growers grow. Okay, what to look for. So I am a fast growth investor. Okay, there's many ways to skin this cat, and what works for me might not work for you, and what works for you might not work for me, whatever. But I'm here to show you guys the basics. Okay, of the stock market. That's what I want to do. All right. If you go, not everybody has the money to go spend $2,000 to $5,000 on a stock market course to learn about the stock market. Okay. So I've spent thousands on education when it comes to the market, and well worth it. I would do it all over again. But not everybody can afford that. So I want to give a little bit of game for free. And because first, I'm a Christian, so I want to help everybody out, and I just know what this can do for me, or what it's done for me. So I know it can do it for you guys too. So anyhow, so I'm a fast growth investor. Okay, and how fast growers grow, what to look for. So now that we know what top line and bottom line mean, let's talk about what strong growth actually looks like in a company, especially the fast growers. As a growth investor, this is what I personally look for. Top line growth. A fast growing company should be growing revenue at 15% or more per year. Okay. I actually like 20%. Okay. I actually like 20% or more a year. Okay. Even if 30 to 40, especially in the early stages. All right. So if you can get a company that's really just starting to hit off, like whatever they're doing is starting to take off. It's starting to be trendy, or whatever the case. Like the use case for it is really high for their product, and so it's getting adopted really fast. It's nothing for, like, Nvidia was growing like over 100% a year. Like, it was insane. Right, because the chip demand was insane. Like AI we were on the doorsteps of AI, and the only one that was going to take us all the way through the door was NVIDIA, and that's what ended up happening. And everybody saw value in that, and so they were just, they were buying their chips heavy, and NVIDIA was making a killing. They still are making a killing, and it's still that way, but it's slowed down a little bit. And SoFi is doing the exact same thing right now. They're fintech, and they really just figured out how to attract younger clients, and what the younger generation was looking for when it came to like the new style of banking. Okay, because you take old style banking where you're writing checks and you have a checkbook. Well, SoFi is pretty much all online, and no hands on, and but the online presence, but the way they have it set up is actually really, really good. And I have SoFi. I've done a loan through SoFi. I've been investing in SoFi for a long time, but it's a great company. And just this year alone, I think like at the beginning of this year, I think it started off at like $7, and I think last week it hit like $21 or something, right? So it's like 300%. You know what I mean? So like 20% a year is good. So if I just did like 300% this year, so anyhow, that's a fast grower, right? Like that's a fast grower. If you can get in the beginning years too, man, you it ain't nothing for you to double, triple, 10x your money. So that's why I like fast growers. Okay. Bottom line growth. All right. Now here's the key. I also want to see net income or earnings per share (EPS) growing fast too. A strong fast grower should aim for 20% bottom line growth year over year. Why? Because it means they're not just growing sales, they're actually keeping more of that money as profit. This shows good management, efficient operations, and scalability. Like I went over in the beginning, okay? Rule of thumb I use, okay? This my personal formula when I'm looking at a company and I'm debating whether I want to buy shares or do an option on that company. I am looking for that 15 to 20% minimum, right? If it ain't got that, I don't want to touch it, right? And that's for the bottom line, okay? I personally don't really pay attention to the top line that much because the bottom line was what's most important. But they both matter, you know what I mean? Bonus tips for the viewers. Watch out for companies that grow revenue fast, but their profits are flat or shrinking. Like I said, that can happen. Like they can look great on the top line and be shit on the bottom line. Okay? And that's a red flag, and stay away from those. Or dig a little deeper and just make sure that maybe there's a reason why this year is different than the previous years. Okay? Like Meta, it ain't nothing for Meta to take a year off and just like right now, Mark Zuckerberg is spending like $100 million just trying to poach other people's engineers and geniuses in other companies. Okay, because he knows the brains is what's going to push his company further, right? So he sees that and he's willing to take a bet on that, right? So and that could it could hurt the company financially, not hurt them, but it could like hurt their numbers as far as like what investors are looking for. It could hurt the numbers for like a year, but then it's going to turn around and pick right back up the year after. I hope that makes sense. All right, wrap this segment up with fast growing companies should scale both top line and bottom line. Otherwise, you're just watching sales, not success. Focus on who can grow and profit. Cool. All right, guys. That's the end of this one. Short, simple, and sweet. I really hope you guys got something out of this. If you did get something out of this, please like, please subscribe. I give game for free.